welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a divorce, financial mediator, and business valuation expert in St. Louis, Missouri. Today, we're speaking with Amber Widener about minimizing taxes and maximizing wealth. It's really about the sunset of the Tax Cuts and Jobs Act, or TCJA, in 2025. Amber is a partner of Business Valuation and Advisory at Seidel Schroeder, providing over 2 decades of experience. She also has extensive valuation expertise, having performed hundreds of appraisals in conjunction with gift and estate tax planning, transactory advisory, which is M&A, ESOP, litigation, lending purposes. Oh my gosh, so many things. Welcome, Amber. How are you?
Doing well. Thank you for having me, Melissa. Appreciate it.
But what are the major provisions of this act that are set to expire in 2025 that we would even care about as business owners?
Sure. So the TCJA was enacted in 2017. It's set to sunset in 2025, as you just said. There's a lot of provisions. It was the largest overhaul in 3 decades to the tax code. So there was a lot packed in there. So as a business owner, some of the major provisions that are relevant, one, the marginal tax rate decreased from 35% to 21% for corporations. There are also changes in depreciation, deductions, expensing, and tax credits. So one of the biggest provisions in there that I am seeing as relevant to business owners, and I'll tell you why in a minute, is the sunset of the estate and gift tax exemption. So currently, for a single individual, that exemption is about $13.61 million. So for a married couple, that's $27.22 million. So currently, that is the exemption. So if you pass away, that is the amount that is exempt from your estate, and you do not have to pay estate tax on that amount. So if this law does sunset, and we don't know, we don't have a crystal ball, but we do know that action will need to be taken for it not to sunset. So as of right now, it's supposed to sunset in 25. That exemption for gift and estate is, for an individual, going to go down, adjusted for inflation, to about $7 million. And so that's about, double that for a married couple. So that, to me, is one of the largest changes, at least for what I do. And the reason that that's so relevant, I feel, for business owners is because I work with estate planning attorneys a lot, and many of their clients know they're in a taxable estate situation. And when I say a taxable estate, I mean they know they have assets above that threshold of the exemption. They might know that. Well, I also work with business owners in an advisory capacity. So they come in, maybe they're thinking about selling their company in a few years. Maybe they are wanting to give equity compensation to their employees, what have you. So they're coming in for a completely different purpose. And so we do an appraisal, and we kind of see where they're at from the value of their company. And as I'm looking at it, I start to realize so many of these business owners are actually in a taxable estate situation right now.